All right, guys. Okay, welcome to Skinny School, how to use the skinny in the markets to boost your trading. I'm very excited to share this information with you to get those of you who are newer up and running as fast as possible, and those of you who've been using this skinny for some time or a long time to get you fully understanding all the power behind the reports and how we use them, all right? So we're gonna dive right in. First, remind you that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this session. Now, most of Skinny School is going to be about deploying the analysis, understanding the strategies, and looking at the educational side of it. There are going to be parts of Skinny School where we're going to go to the live markets. And so those of you seeing this information pertaining to the current price action at the time of this recording, or trying to translate it to whenever you are watching it in the future, please be advised that you should practice everything you see here, practice with the skinny before you start using it, and make sure you have a handle on it in a practice or simulated mode before proceeding with real accounts. This is crucially important. So those of you here live, type a D for disclosure. You understand the risks of trading and using the skinny, and you're ready to dive in and learn more. All right, awesome. So Skinny School objectives. I gotta say, I have been wanting to do Skinny School for a long time because I realized that there is a level of market analysis and trading observation that I have kind of reached that then makes the details second nature to me, but not to everyone else. And so it's time now, especially that there are many of you who are been with the skinny for months or even years, that we really make sure everyone who comes to the markets, whether you're new to the markets or a veteran, has the ability to put it to best use. So I asked you guys about this in the members Facebook group. Which of these would you like to see the most? And the great news is we're going to cover all of them. In Skinny School, we're going to learn how to best apply the ES and NQ futures reports to analyzing and trading futures. So this includes a really deep understanding of the report structure, why it is the way it is, and the underlying current of what you can use there. And I'm going to show you like the underbelly, if you will. And then, of course, how to actually translate the analysis to trading. Learn how to best apply the weekly stock picks to analyzing and swing trading stocks. Okay, so the Skinny on Stocks is the third report in the current bundle, and we want to make sure that you guys are understanding that out of the gate and able to best apply it. Learn how to use HEMA's price, time, momentum trifecta, and unique tools and strategies as expressed through the Skinny in the Markets reports. So what I mean by this is that many of you are familiar probably with my momentum work, RSI power zones, maybe the time, loss forecasting trading system, maybe with price, not only the Skinny reports themselves, but currently the Gann trading pattern system, okay? And folks watching this in the future, I will likely have put out another course or service by then, fleshing out more of what I do, because I learned a lot in my 21 years of trading. Traditional technical analysis, Gann analysis, and then my dad's sort of custom breed of looking at the markets from his experience. And all of that together is what I see the moment I look at a chart. And so I want to give you that sort of like, you know, higher vision, that enlightened eye by showing you how all the pieces work together. So we will spend time looking at the elements of the chart, the elements of the parts of the report, and of course, like I said, looking at it with the live markets. And I want you to learn by example, watching HEMA's live application of the ES futures report during the regular trading session. So we're going to focus in on one of the futures reports, because both the ES and NQ can be used for day trading. And we're going to take my baby, the ES, and in our tail end of Skinny School, we're going to look at it with live markets. All right? So these are our objectives. If you guys follow this, sounds good. If you have any questions, let me know at this time. Those we're going to go ahead and proceed. All right, type a Y for me if you're ready to go. All right, awesome. All right, so Skinny in the Markets reports recap. Here's what you are getting as a Skinny in the Markets member, whether it's for a 30-day pass or longer. So the first is the Skinny and the Mini, my original report and still going strong. How original? I looked in my files, I could find them going back to the early 2000s. That's how long I have been writing this. And it started with me writing it after the markets for my dad when he was teaching me trading as an exercise to recap what had happened in the day. This started off as just my review tool, okay? Now, what I've done with it is develop it to be a action tool for you guys. So this is covering the E-mini S&P 500 futures, and it's 3 times a week. It's delivered right to your email inbox so that you don't have to go digging for it, so that you can get up and running and use the report as soon as possible. And every time it's complete and fresh analysis of the ES futures market. Now, when you came into the Skinny in the Markets, okay, I promised you the ES reports 3 times a week and the NQ futures 2 times a week. And that's what I deliver. Now, the ES, again, because it's my baby, honestly, if I'm not traveling or on a vacation or sort of downtime like that, I will regularly over-deliver by publishing this 5 times a week. So yes, someone's here saying, I'm getting the ES every day. That is correct. That is not a robot coming in on the extra 2 days. That's me, okay? So I commit to 3 times a week to honor the time freedom I want in my life, which I hope you guys value for yourself and you get that back for yourself soon. But I often over-deliver. So I just want you to be clear on that. Now, when the report is written, it goes into the portal first. Then you get an email. So this is how this works. So I'm just going to hop over to the portal for a second. All right. So here we are, Skinny reports. The current Skinny on the Mini reports is where all the ES futures reports are. Okay. Now, this file ends up having a lot of history. So the team started archiving. So what we're going to do going forward is focus on the current contract being available, all the reports in the current contract, the front month, and then all the other ones go archive back in our system. So for example, at the time that we're doing this session together, it is Tuesday, June 9th, 2020. Soon we're going to be rolling over to the next contract, to the September contract. So I'll hang on to a few of these June contracts, and then we'll have just the September contracts in here. Now, this is where the report gets populated and dropped first, so that you can have it as fast as possible, because that's just like a cut and paste for me. Then my team takes it and quickly goes and puts it into our email broadcast system and sends it to you. So this is why from the moment there's the timestamp, okay, there's a few minutes delay at the least to get it into a template to email to you, because we have to customize everything in the email, then generate it and send it out. Okay, so just type a Y for me that you understand that that is the way you can get the Skinny the fastest. And if you wait for it in your inbox, it's going to be a matter of minutes. Now, it could be longer than a few minutes depending on your deliverability of whatever email you use. And in a moment, when we go into the deep report structure, I'll talk a little bit more about, well, let me scratch that. Okay, so everyone understands about the timings in terms of their deliverability. Great. Now, I aim to put the finished report into the portal by 9:15 Eastern most days. Specifically, because in my own experience, if you start looking at the market well before 9:15 Eastern, especially if it's a day where there's big data at 8:30 Eastern, then the whole outlook could be totally gone awry if I publish too early. Obviously, if I publish too late or too close, then you don't have enough time to read it. So I purposely aim to publish between 9 and 9:15. Sometimes it'll be earlier, sometimes it might be later. Unforeseen things come up, so I'm targeting that, and that will be the general flow, okay? All right. So let's come back to the actual breakdown and go on to our other reports, and then we're going to come back to the deep dive on the skinny here. All right. Now, the skinny on the NQ, all right, it's delivered in the same way in terms of the structure of the analysis. So here you're getting the E-mini NASDAQ 100 futures analysis bi-weekly, right? It's customized to the pulse of this specific market, and it's complete and fresh analysis of the NQ every time. Now, the NQ futures are in the portal only. Because of the time frame that is the pulse of the NQ, they are not as time sensitive to having you get it in your inbox urgently. Plus, if we took the time to publish both, you would get everything late, really late. So we keep this in the portal only. So in the portal, if you go to Skinny Reports and current Skinny on the NQ reports, in a similar fashion, we have this embedded document, and you can see everything in here. All right. Now, the publication of the NQ futures is on Mondays and Wednesdays generally. I target it also for that 9 to 9:15 to be ready in the portal. And when I'm sending out the email for the ES, when you get the email that the ES is ready, it means everything else that's supposed to be ready at that time is ready. Okay. Now, another point about scheduling. When I know in advance that I won't be publishing in a particular day, okay, I'll mention it in a report. But sometimes unforeseen things come up and I just can't get to my desk. So I want you guys to realize that as you go along with me in this trading journey, okay, I'll say over and over again that it's important for you to also learn to do your analysis to go along with mine. You're here to learn to fish, first by getting the fish, and then by reviewing it and applying it more and more, you're going to learn to fish. That's what I want my tribe to be, okay? Empowered fisher women and men, okay? So on those rare occasions that the market's open before the report arrives to you, it's great for you to be checking your own analysis against the market and see how you're coming along, right? Then you can compare your analysis against mine and do the fine tuning. Now I'm going to go into details about how I recommend using the Skinny reports, whether you're beginner, intermediate, or advanced. But at this point, I'm going to check in and see what questions you have, and then we'll move on to our other types of reports here. Okay, so now let's move on. So we're going to briefly talk here about the Skinny on stocks, and we'll spend more time on it later in Skinny School. So moving beyond futures, report number 3 is the Skinny on stocks. Okay, so this weekly report gives you my top picks from the S&P 500 stock components, and it's in a really easy to use grid format, which we're going to look at more later in Skinny School. It is built to mimic how trends shift and move themselves over time, and I'm going to show you that. And there are clearly defined recommendations on what type of action to take to help you find the hottest setups at that time, okay? So that you can then translate them to your risk reward parameters and start to see the market trends like I do. So the Skinny on stocks is just also not time sensitive for day traders. It is kept in the secure portal, okay? So the Skinny on stocks is generally published Tuesday nights by 11 p.m. Eastern. You want to write that down. Tuesday by 11 p.m. Eastern. You'll get an email notification when it's ready in the portal. Okay, that's something I'm going to start doing from this Skinny School forward, is that when it's ready in the portal, you get an email so that you can just get to it as soon as possible. Again, generally Tuesdays by 11 p.m. Eastern. Okay, I'm, as an educator, very aware that you need time to digest the information and apply it with consideration to your trading plan. And there's also the sensitivity I have to giving you the information when it's hot, timely, and actionable enough. So it's always that balance between making sure it gets to you in time to review, but making sure it's not stale and old. Okay, so unless there's unforeseen circumstances, I send out the reports as soon as possible, as soon as I can have them ready for you. And that's normally before the markets open in the mornings. Now, if I'm traveling and I'm in an international time zone where it's not conducive to me getting up in the middle of the night to publish, because that's to me not time freedom, then you're going to know about my updated schedule and you'll probably get an evening report or maybe a very early morning report, you know, like 4 or 5 a.m. if that's accommodating to the time zone I'm in. So we've got the skinny on the mini 3 times a week or more, skinny on NASDAQ twice a week, and the skinny on stocks. So the skinny on stocks will spend a little bit more time later. The number of stocks in the grid depends on what I'm seeing in the markets. So we're going to get to that, right? All right, cool. So now, remember, there are 3 keys to trading using the skinny that you have to know to get your max results, right? So we've got the most liquid market with the ES, the most watched market, the S&P 500, and the biggest growth potential with the tech stocks. So let's focus here for a second, all right? Those of you who are newer to trading futures, I want to remind you so that you understand the benefit of trading the ES or using its analysis to guide other trading. Okay, the E-mini S&P 500 futures market allows you to leverage the power of the S&P. And I have been analyzing and trading this market for 21 years to date, using both traditional technical analysis along with my proprietary tools and strategies. And like I said, GAN methods plus things I learned from my father. Now, often called moves to the tick, right? The exact price point, or very close to it, such that over the course of publishing the skinny and the mini and sharing it with traders, you've told me that 70% of the time or better, you're able to ROI in the report. Now, how does this get done? It's through a very specific report structure. So here is where we're going to focus today, and we're going to go into TradeStation and look at this and compare. So I'm going to now do a deep dive of the futures reports. We're going to go into the structure. I'm going to explain the best practices, and I want you to get ready to take notes, okay? You guys still with me who are live? Go ahead and type a Y for me in the chat. I see your questions. If your question will be answered later, I'll save it for later. If it's more of a personal question, I'll have Anna reach out to you from support, okay? I want you to ask your questions, but of course I'm only going to address the ones that I know are conducive to what we're covering here. We've got time to get through everything. All right, great. So every time I sit to publish the skinny, your report that you receive starts with the freshly analyzed chart of the ES from my end. So you can see all of the glorious technical analysis, GAN analysis, HEMA techniques, etc., in action across price, time, momentum, right? My trifecta. Now, I want you to notice it says 60-minute chart underneath this chart. This is key, guys. Okay, this is the pulse of this market, and it took me years to get to it. So what I mean by the pulse of this market is that because I provide the skinny and the mini with a 60-minute chart, that's what makes it relatable to day traders as well as to swing traders. So no matter what time frame you are currently trading in the ES or decide to trade, please always plot your own 60-minute chart. I'm going to say that again. Please write that down. No matter what time frame you're studying or trading on the ES futures, always have a chart of the 60-minute so that you can do your own analysis on it and directly translate the skinny analysis to it. Now, the way that my hourly chart is set up is specific to my software, which I use TradeStation, and I'm currently, as of this teaching, in the 9.5 version. So I will go there now with you for a moment and show you the exact way my time is set up on my charts. You guys have asked about this many times. I've shared this in personal sessions with my coaching students. I'm going to share it now, and you're going to have it officially accessible to revisit at any time. So type a Y for me, especially TradeStation users. If you're excited, you're going to finally get to see all the nuance in the settings. All right, fantastic. So those of you who are here live, I got to finagle a little. I got to pause. I had to restart my computer, so I got to get my TradeStation again. And I have exact notes on what I want to show you, so this should be really clear. All right, so give me a moment for this to get loaded up. All right. It's just taking a second. Like I said, before I had that PowerPoint tech glitch, I had everything nice and loaded, but it's all good. So we'll cut this wait time out of the recording. All right, about to reveal this to you in a moment. All right, can you guys confirm that you can see my TradeStation screen? So I'm going to demonstrate for you the way I plot those hourly bars here on TradeStation. If you're using a different software than TradeStation, then you can check out your support or help archives regarding chart timings in your platform, or reach out to your respective support team. All right, so I'm going to show you right off the bat how things look, okay? So here is the ES M20 current contract on the 60-minute chart as I gave it to you in the skinny. Okay, this right-hand side one is not. What's the difference? Well, this is the way that a lot of folks look at their trading. They look at it based on the trading day only. And for a US-based market, that's the 9:30 Eastern to the 4 p.m. closing time, or 4:15 close time for futures. My dad taught me that even though I should only, for me personally, given I grew up in New York and all, be trading the regular hours, that I need to look at the price action of the entire futures contract to get the best analysis done. So do you guys see how this right side one has all these gaps in it every day? Okay, it's covered up with some analysis, but that's because it's only plotting the regular session. I want to focus on plotting the full session, but there's two specific adjustments you need to make to follow along. All right, so if you've got TradeStation you want to follow along, please do. Otherwise, you can follow along in your own platform regarding settings. So here in TradeStation, we can go to Format Symbol to bring up the window that allows us to adjust the way the bars are plotted. Specifically, it's the Properties tab. So normally this will open up to Settings. We want to jump over to Properties. Now in the Properties tab, we want to go to the session. So that's right here. And see how it says regular session? That's what I want. Okay. If you click the three dots here, it explains what this means. So this is very important because this is why my data looks the way it does. And yes, different softwares may plot the ES differently, but if you align your time markers to mine, you really should have no difference because the price is the price is the price. So take a look at this window down here, okay? When you make toggles here between use regular session or use custom session, it changes what will be presented. Do you guys see how I am capturing the day not based on the calendar, not based on midnight to midnight. I'm capturing it based on the time of the trading focus, meaning for me, Monday's session will encapsulate the overnight activity coming in from Sunday starting at 5 p.m. and Monday's session will end at the regular market close. This is super important. So type a Y for me if you understand. I plot my charts so that one day on the chart is capturing not the 24-hour cycle of that date, is capturing the nighttime stuff from the day before into that day's regular session close. So you can see that here with the 5 p.m. and the 4 p.m., etc. Okay. Now, if I were to use the custom session, I want you to keep your eyeballs on this section here, guys. If I click to custom session, do you see how it changes to the standard calendar approach? It's not a matter of right or wrong. It's a matter of what I was taught and how my analysis vibes with that. And so if it ain't broke, don't fix it, right? So I'm showing you the underbelly of why my chart looks the way it does. So if you go and use custom session because you think, oh, a 24-hour chart is going to be the same as a regular session, right? Because everything here is in green, except for that little sliver when there's a break. It's not true because your bars will plot and look different than mine. If you go even a step beyond that, and then you start to look at the drop down here in TradeStation, okay, US stock with post-market, US stock with pre and post, US stock with pre-market, then you start having charts that look like that gappy one I showed you. And I don't want to spend time on those because I don't advise plotting that way. I'm just showing you those options. So I'm going to hold the screen here and show you. This section right here is what not to do if you want to plot your charts the way I do. This right here is what to do in TradeStation, currently the way 9.5 shows it, to plot your hours like I do. Type a Y if you guys understand this. Awesome. Okay, so now we're going to come back to the TradeStation and the details of the charts. I really wanted to make this vitally important. So now you understand the origins of that timestamp on the chart even better. And let me also explain. Notice this, the time on the chart, okay, in this particular example, 8:29 a.m. Eastern, notice that that's not an hourly round number. So I'm telling you literally when I snapped the image. If you have TradeStation and you want to snap your own image charts, let me show you how I do that. Okay, so you go up to File, Save as Picture, Active Window, because we just want our one chart. I don't need everything in this workspace. And then you would hit Save As you would any other file. So I'm not going to click Save As because I don't know what of my private stuff it might reveal to you, but you get the idea, okay? So if you have any questions on how to set up the hours to be similar to the way it is in the skinny, how to capture an image, let me know. Otherwise, we're going to keep chugging along here. All right. So now let's get deeper into the other elements of the report. One other element here that we're not going to spend too much time on right this second, but we will get to later, is that every single chart, NQ or ES, has this indicator that you see in the bottom. It has since the beginning of time. That's how long I've been using RSI power zones. Even the earliest skinnies I used to write and only send to my dad had the RSI power zones on them. So my RSI power zones indicator is at the bottom of every chart. Okay, we'll take a close look at how it works and how it relates to market action. For now, I really want you to focus on the entire report structure and how to best apply the analysis to your trading reports. Just really getting a solid handle on all the elements and how to apply or recreate them as needed. All right, let's move on. So we've now got the prior commentary. So the accountability that comes from the timestamp, right, where you can see exactly what the market did previously, is really highlighted by this gray line. Now, you may have seen this before where I come in and I highlight it like this. That's for a teaching point of view, but I want you guys to understand, those of you who are new, it will always be a gray vertical line like this. So if we bring up the latest, this is the image and this was the gray vertical line that was there this morning, okay? Now that is marking the hour during which I captured the chart image. So let's start comparing apples to apples here. So this is where you can go and get your first handout. That's the June 9th file, since here we are sitting on June 9th. And let's take a look. All right. So here you can see that I wrote in prior commentary, yesterday at 9:10 Eastern, I wrote. And then we can go and look at where that line was. So this is that gray vertical line. And it's in the same spot that it was on the chart. Now, I want you to notice something. The way that TradeStation plots the chart, the name of the hour, the number on the hour, is the hour ending time. So let me follow along with you here. So this green candle right here, see how it says 10 a.m.? It ended at 10 a.m. This bar ended at 11 a.m. This bar ended at 12 p.m., okay? When I publish the report and I'm capturing the chart before 9:15, I will count that. If there hasn't been much price movement, I will mark that as the 9 a.m. bar. So technically, it's maybe 7 or 10 or 12 minutes after the hour ended. But as long as the price action is basically standing still, I will mark that bar. So I'm not trying to go back in time and say that I said something 10 minutes earlier than I did, but it makes it more clear for your analysis. Type a Y for me if you understand that when I publish between 9 and 9:15, which is the majority of the time, I will mark the bar ending at 9 a.m. So you don't even have to really go and backtrack. When you see that gray vertical line, it matches the hour ending the time on the chart. And when I'm publishing in the usual schedule, 9 to 9:15, that's going to be the 9 a.m. bar. So let's say I was traveling, like, I was in India recently and I published at 10 p.m. your time. So it was with, after I had brunch with my mom and came back to the room for a little bit before enjoying my day, that's when I would publish. So if it was 10 p.m., then there's the military clock on here on my charts, but I will tell it to you in normal PM, AM timing. So I would go to 2200 and I would have put the line there if I was publishing at 10 p.m. as an example. All right, cool. All right, pausing the screen so I can get back to where I need to be because, like I said, with this Google Sheets, I'm not as used to it, but I think we're doing okay. Okay. So Jeffrey's asking, so it would be the 8 to 9 a.m. bar. Yes, 8 to 9 a.m. Eastern. So I will always talk about this report in Eastern time. No matter what time zone I'm traveling in, living in, I will talk about it in Eastern time. Good question. Okay, guys, so let's move along in the report here. So the recap. Okay, so I recap how the market actually played out because history is one of the greatest teachers, right? And even recent history, like the previous session, can show you how to optimize your chances of success in the future. I highly, highly recommend that you read the recap, not only when the report comes out, but at the end of each week, you go back, look at all the reports for that week, and read the prior commentaries and recaps only and compare them to your live charts as an exercise. Of course, you can revisit the outlooks, okay? But here's where I'm gonna bring up our weekly bundle and show you what I mean. So go grab your handout that has the weekly chart bundle. So this is getting you familiar with how the reports are posted to the portal. You could just look at all your emails. You could save them in a folder. That works too. But here I made a PDF. So everybody type a Y for me when you're ready with your week bundle. So it's in the portal, it was the handout called, so under Skinny School. Currently, it's this second document. All right. So the latest report in the bundle, the most recent one is Thursday, June 4th. If you go back in time, it's Wednesday, June 3rd, etc. Okay. So I'm suggesting, and I'm going to give you more details about this as part of your weekly review of the markets. And especially, doesn't matter if you're a day trader or a swing trader, you should be checking in with the markets at least once a week to gauge positions and manage them. What I'm saying is this: at the end of the week, get the last 5 reports. So in this case, there was a Thursday night report. I didn't publish that Friday morning. I published Thursday night instead. Then I published Monday, Tuesday, Wednesday, Thursday. And then the next Friday, I was actually getting ready for this, for Skinny School. So, oh, also, I'll show you the other reason I didn't publish that day. It's a little side sort of scoop for Skinny members. So let's go back to the beginning of the report. So if you get seasick easily, close your eyes for a second. I'm going to scroll down really fast. Okay, 3, 2, 1. And now you can open your eyes. And now we're at the beginning of the time series. So it's the end of the file because we're going to the report that started on Friday into Friday, May 29th. Okay? So into Friday, May 29th, when you see a report like that, it means that I'm publishing a report for a particular session's focus, but I'm not publishing on that day. So this was gathered and created Thursday night at 10 p.m. And you guys got it Thursday night shortly after 10 p.m., but it was designed to apply to the following morning session. And it can be useful because we're looking at hourly charts. And when I write a report into the next session, I'm writing it with that idea that this needs to last, you guys. So type a Y for me if you understand when it says into. You're going to see that once in a while, especially if I'm on some sort of vacation schedule and I go to sleep at 2 a.m. Then I would give you a much better report when I'm fresh at midnight than trying to get myself up, you know, early in the morning. All right, cool. So what I'm saying in your weekly practice, come in and read the prior commentary along with the recap and go to your own charts and compare it. Okay, so do that for one. Okay, then we scroll up a little to the next one. Then do that for the next one. So this was Monday, June 1st. And the spacing is just a little wonky because it's a PDF, but if you have saved out emails, you don't have to worry about it. Because remember, the ES, I will always, always, always email. So you can just save a folder, create a folder, whether you use Gmail or whatever else. Create a folder that either sends the reports there automatically if you know you're going to remember to go look at it, or after you open it, file it away there so you have them all. And I want you to do the same exercise. Come back, read the prior commentary and the recap. Why am I telling you this? This is the origins of the skinny. The skinny that I wrote, that I created as a side/bonus project, you know, for my dad and me, was to help us know what the heck happened that day. Especially, this was early in the time of the ES when it was volatile all the time, not just because of a pandemic, not just because of crazy market data. It was just a fast moving place, all right? I feel like I grew up trading in the lion's den because of that. So it really helped after the close to come back and say, okay, what did I think was going to happen? What happened? And I used to write the outlook for my dad the afternoon the market closed. So for example, today's a Tuesday. I would write the outlook now, 4 or 5 p.m. because I was younger. I didn't like waking up early. So I'd do all my prep before and then, you know, kind of sleep in as late as I could before the market would open. I lived in New York, so it helped being on the East Coast. But then I realized, what if I experiment and I have everything ready? Like I kind of know where things are going, but I write the outlook for myself. I do that analysis fresh in the morning, and the modern day skinny was born. Okay. All right. So great. So let me bring us back. So that's my point about the recap. My special highlight is make sure you come back and review them. Type a Y for me if you understand that. There's a lot of value in learning from what happened versus what we thought was going to happen. Fantastic. Okay. Now the outlook. All right. The outlook is the most important section of the report. Okay. It gives you my precise analysis, again, based on my 20-something years analyzing the markets. It gives you what you need to take advantage of the price action ahead, whether the ES trades up or down from the time the report is published. So how do I do that? How do I prepare you for both sides? First, I write what I think is going to happen, okay? And usually that starts with some sort of reference to what happened. And this term during the overnight, you will see very, very often at the beginning of the outlook. So what does that mean? Well, we're going to touch on other sort of skinny glossary terms later in skinny school, but let me take you to the market and show you what I mean by during the overnight. So remember how I showed you my settings, that the regular session is what I'm using for the hourly bars? Here's what's going down. Okay, so let me use a little Illustrator tool to make this clear. Annotate. All right. So see how this was 9 a.m. today in our example, right? Because this is based on the current June 9th report published just after 9 a.m. The report was captured, the image was captured at 9:07. That's the 9 a.m. hour. Everything leading into this, okay, the early morning plus the night before, everything that happened after 4:15 on Monday, to me, is the overnight I'm talking about into Tuesday, 9:30 a.m. I'll say it again. Everything that happens Monday after 4:15 Eastern is what I call the overnight and extends into 9:29 a.m. Eastern on Tuesday. Type a Y if you guys understand that, you jot that down. So on the chart, what does that look like? So like I said, all these hours before, 6 a.m., 5 a.m., 4 a.m., keep going, keep going. It doesn't just count what happened after midnight. It counts what happened prior to midnight in the previous calendar day, but will still, on my daily chart, collect in the current session day. And keeps going back until these two bars, because it's going to be in the middle, because this is the hour ending at 4 p.m. This is the hour ending at 5 p.m. Technically, the market closed at 4:15. So the actual traded value or low, sometimes I'll go nitty gritty and I'll tell you that in the recap, but I'm basically talking about this 4 to 5 p.m. hour all the way to 9 a.m. the next day or whenever it is I publish. Okay. Now, if it's not the overnight, if I happen to be publishing to you at a time of day that I know that I'm publishing to you, in the evening, then the language will reflect that. But most of the time, it'll say during the overnight. Okay. So coming back to the outlook. So I give you the scenario, okay, what I think is going to happen if X, Y, Z, I lay out that case, and then I give you the alternative. Now, many times I'll give this to you in a bulleted fashion if there's not a clear, strong conviction from me. So let's look at our June 9th report example. Look at the outlook for today. Futures are at a decision point. Okay, decision point, inflection point, key point. Those are all ways of me saying I don't have a strong enough case for one versus the other. Be careful. So the first bullet I put in is what I think is going to happen. It just is. It's my first inclination. The second bullet is that other possibility, right? If this happens, great. If that happens, great. You're prepared for both sides. So I just wanted to be clear that when you see bullets like this, either on their own or with a preface, that means that I don't have a strong conviction. Now, if I do have a strong conviction, so let's go to our weekly bundle. Let's see if there's any time here when I have a strong conviction. So, back on, so this was the June 1st report on Monday. All right, I was talking about how futures remain near a key level. So I didn't start off with during the overnight. I just said, look, futures are still piling around this 3048.38, and I keep old levels on the chart as dashed lines. Now you'll be able to see these more when you expand the chart with your ES chart in your email. But do you see how this key level right here was still on this chart as a dashed line and a label? Type a Y for me if you see that. So whenever I publish the chart, I keep the most recent key levels obvious in view. And you can see here, I had pretty clear idea of what I was going to say. I didn't say markets at a key point or whatever. I said if they can post a daily closing break above that level today. So I was looking for the daily session, so not these hourly bars, but the overall day session to post a close above that level. And then I was expecting it to continue on its path to 31.31. But then I also always have the alternate. If instead, 99% of the time, I will say if instead as my backup. So that is the scenario that HEMA does not think is going to play out, but I want you to have protection and backup. Okay? And then I give you the levels to watch for what the action could be. So on the outlook, we have a few things to make sure you guys understand. Do you now understand that if I have strong conviction, I will give you that scenario up front, but there will always be a backup. Type a Y for me. And if I don't have strong conviction, then what you will see is me outright basically saying, look, I don't know where the market's going to go, but here's my hint, and I'll still put what I think is going to happen first. And that will be in bullets. Okay, understanding that can help you use the report more powerfully and more quickly than you may have been using, or for those of you who are brand new, kind of start you off on the right approach here. All right, awesome. All right, a few more important points about the outlook. When you get the report, I, of course, want you to read the whole thing, but if you are crunched for time, the outlook is the most important to review. Just skip everything else for whatever reason. If you know, you thought you gave the kids their breakfast, but then they're asking you because they want a different cereal and you're distracted from your desk, read the outlook. If you know, had to wait to take a shower before going to work, and so you had to wait for the hot water, and so you're getting ready late, so you have to go to the car faster than you thought, and you have less time to trade, read the outlook. Okay, I'm trying to think of practical real world scenarios, especially from those you've told me, especially, you know, coaching students. So the mantra is, if you're short on time, read the outlook. If you're short on time, just focus on the outlook. Okay, now we move on through the rest of the report. And again, everything I'm going through here in such great detail applies to the NQ Futures report as well. All right, now from the outlook, I go on to finish the report with a few key technical baskets of information. We've got resistance and support levels, which are above and below the current price. And the current version of the skinny, I do note the current price in between. So these are the levels that are drawn on the chart that you saw as a visual with the explanations of where I derive the levels. Some of these are very straightforward in terms of being just old highs and lows on the chart. So I might be pulling those from, say, the daily chart. Or I might have like a 15-minute high or low if I thought it was really important, okay? I will tell you what I'm doing to derive the report, but I won't necessarily teach it to you here because time is of the essence for me to get that out to you. So for example, midpoint of a Friday, August 25th range, if you're wondering why is HEMA using a midpoint of a range, what's important about that, then you can ask, and I'll talk to you about how you can ask questions and stay on top of things. You can attempt to recreate the analysis yourself. And again, I have more specific directives on that depending on what level you're at. And when it's not an obvious level, so let's go to our basket from a week, the week basket. So everyone go to the weekly basket of reports, and I'm just pausing. Oh wait, I don't want to give you a headache. So I'm going to pause the screen for a second and I'm going to scroll really fast to get to examples. Okay, so perfect example on page 2. Everyone go to page 2 of your bundle, okay? So on page 2, the resistance levels are all pretty straightforward, okay? And I'm gonna get into them more in a moment. Something I wrote here has very technical meaning that you may not know. High of a 60-minute price probe. If you're brand new to the skinny, you won't even know what that is. Again, I'll talk to you about the ways you can ask and get help, but sometimes what I'm doing here is deploying my analysis methods all at once. And you learn them before you get here. So if you're new to the markets, this is a great way for you to just come through the report, highlight, mark off the things that you don't know or understand. And then again, I'm going to give you a pathway of how to go study them, all right? But the levels are derived mainly 2 ways, either from direct price action or my calculations based on price. Sometimes they're based on calculations with momentum. So type a Y if you understand that. Okay, these are levels I'm actually calculating. There's not a software generating these for me. And when you're seeing them on your charts, the resistance lines are in blue. So you can see that even here on the embedded dock itself. And the support lines are pink. Now, how many lines I show sometimes is a matter of time. Do I have time at the end of me writing all the reports, come back and really focus you on only the levels I think are going to be hit that day? Sometimes I do, sometimes I don't. So just because support and resistance is present in any one edition of the skinny doesn't mean I think the market's going to trade through all that levels, all right, all those levels. So let me go in more detail about the support and resistance here. So resistance levels are areas above price. They are areas where I am seeing sellers waiting. They could be strong sellers that when price gets up there, price just stops, tops out, turns lower. Or those sellers could be kind of weak, lazy, whatever you want to call it. and price could go through these levels and not do a thing. We don't know which support or resistance levels are actually going to become actionable, but we can be prepared for them on our charts. And you're going to see more of that when we go live with the reports, okay? So support levels are in a similar way. They are where buyers are waiting. Are they strong buyers that when the price dives into those levels, it then surges back up? To be determined, not just based on what happens going into price, but what else might be fortifying it. So when you see me list more than one source of information or more than one level, for example, in this report example in our slide deck, see how I have 2474 and I had it very close to another important high. So 2 different dates had the high 2 ticks apart. That's where I said, oh, that's important. So that would probably be a more strong resistance level. Not a guarantee, probably more strong, okay? So I'm not seeing a physical number of buyers or sellers there. There are methods to trading where you can use certain data to try to see who's waiting to execute orders. I'm not going that route. I'm just going off of experience of knowing which types of support and resistance hold stronger than others. And again, we're going to get more to that when we take these live. All right. So let's go to our most recent report, today's report, and let's practice together. Okay, so this is today's report, and let's practice together recreating 3 supports and 3 resistance levels. That's it. Okay, so we're gonna take this. I'm going to put it off into my side screen. I'll bring it back, and I'm gonna bring up my TradeStation on top, and I'll bring a blank chart so we can all do this together. So let me go grab that. All right. Okay, so does everybody see my blank chart here? Type of Y if you see my blank ES 60-minute chart. Okay. Now we're taking, I'm going to try to make it minimize. Let's see if I can do this. All right, cool. So I can do this. So what we're going to do is we're going to take the first 3 supports and first 3 resistances. And this is funny. This is supposed to be low. I fixed it right before we emailed to you guys, but I guess I didn't fix it in here. It's not an intraday log, it's an intraday low, okay? So I'm human. You will see typos, they will happen. Usually the typos are in the spelling or something like that. Sometimes I have a typo in a number if I'm going at lightning speed because the market was crazy overnight. Feel free to hit reply and let us know if you see something that you think might be a miss or an error, if you feel like it's confusing you in your application of the markets. But before you do that, go to the chart, go to the outlook, and then go to levels. And if it's only wrong in one place, then it's probably just a typo, okay? Now, let's look at these. So we have an old intraday low, 3217. So if I'm not specifically stating what time frame it's on, then I'm intending for you to realize that it is on the 60-minute chart. And that level is right here, 3217. So everybody type 32, I just type a 17 for me, the number 17, if you understand how I pulled that level and where it is on the chart. Okay. Now, a lot of you ask me, how do I get the chart to look as pretty as I do, where I get the levels to be the start of the drawing point with my nice little labels? That, my friends, is the teacher in me taking the painstaking time to do the long, hard way so that you guys can understand more easily. If I did it the quick and dirty way that TradeStation allows, you would see lines like this. But then what would happen is that you'd be overwhelmed by horizontal lines going all the way through. It wouldn't be so clear where the origin point is. So how I would draw that same level on this chart, I take the trend line tool. So previously we were using the horizontal line tool in TradeStation. In your software, you might have something named similar. I use the trend line tool. And first thing I do is just connect to the price I want. And then under the formatting is where I do all the magic. So first thing first, we're going to extend to the right, not to the left, just to the right. Style, blue for resistance. And that thickness is fine. and then the data. So this is where I can quickly draw a line at a level I want without having to fudge around on the charts a lot by putting both the beginning and end at 3217. That's the result. Do you guys see how this makes it more clear for you to understand the report? And that I actually have to take the time to do that. There is no auto. Maybe there is, but I've been using TradeStation for a long time. I asked them, is there a way for me to type in a bunch of levels and have them plot? And the thing is, I even have programmers that I could go to for that, but it's a lesson I learned from one of my early mentors that when you actually go with your hands and do analysis on the chart, even in this digital way, you sense things that you don't if you just automate everything. And I really still believe that. Maybe that's why I keep this up. All right, so now if I want to finish out the labeling here to look just like what's on the skinny, then in TradeStation I use the text tool, and then I go type in the number. Mine is defaulting to blue. I get out of snap mode so that I can come in like this. Okay, so there's a question about my highlighting when I highlight levels on the chart. So I can show you that since we're in this, how do I draw and analyze a skinny? For that, I use the vertical line. So for a vertical line, if you grab it and put it wherever you want, then what I do on TradeStation is I take off the labels. So show labels goes off. For the style, I pick yellow. I pick the thickest there is, but then I make it more transparent. 40%, 50%. Then it becomes like a highlighter. Good question, Bill, because I do this quite a bit, especially in monthly group coaching live. You guys see how I created a highlighter look by using the existing tool? Okay, so the circle or square highlight is the same way. So sometimes I'll point to a signal. So let's say, for example, here, right here on this chart, we have a bearish divergence. Now, technically, it's in no man's land. And for those of you who know RSI power zones, you follow what I'm saying. If I wanted to mark this, not with the vertical line, but with highlights, I take the little ellipse tool, I grab it, and I have set my defaults to the following. This cyan blue for the line with no transparency, and the fill color cyan blue with no transparency. But because it's such a light color, it doesn't cover up the candles. And if I want to make replicas of it, you just highlight it and go new parallel, and then you can take that guy and move it wherever you want. It's the same size. So then I could come back here and show this as a way to illustrate divergence. One other thing I do, which you will see on the skinny now and then, is I will say, okay, there's a whole zone of resistance or support. So let's say I had decided that this whole zone, okay, between this high and this old bottom was really important. Then what I'd want to do is I'd come in with this square, it's called rectangle tool. I come in, I trace out the rectangle I want. And again, here I could keep my default. So let me change my colors. So let me make it yellow for the line, yellow for the fill, set to default. That way, anytime I make a rectangle again, it'll be like that. And there you go. Highlighter of a zone. A zone of support or resistance is any two levels that I deem close together. There's not like a certain amount of points or ticks in between. So if I'm writing about this and I say, watch out for this resistance zone, and I'll write in the report between 32.17 and 32.31.25, it might be re-emphasized by having the highlight. Okay, great. So let's come back to support and resistance, and then finish out with trend lines. And then I'll give you really actionable steps depending on where you are with the skinny, and then we'll get ready for our next session. Okay, how are you guys feeling? I know we've been marathoning through, but those of you here live, scale of 1 to 10, how are you feeling? Do you need a break? Do you need water? I mean, I need water. I mean, drink water. Okay, great. Okay. One person wrote sleep. Okay. So we've got maybe 20, 25 minutes max left, and I did start about an hour ago. So yeah. All right, sounds good. Okay, so let me get my bearings and get us back, and I can edit the recording. Oh, I was going to draw more of support resistances. I just remembered that. Okay, so let me bring us back. All right, so that was a little anecdote, or I guess side illustration about how I do some of more of the annotations. Let's come back to the reason we came back to the charts right now, which is to draw a couple of these support and resistances. So I need to grab the report that we were working on. All right, so I'm going to say this again. Okay, so that was a look at how I do some more of the annotations that you see on the Skinny reports. Let's come back to our Tuesday, June 9th example and continue to plot a couple support and resistances. So let's go down to the bottom report. And this report I spaced out for you to print out so you can write notes directly on it. That's something I do for myself, that when I want to take notes on something, I give myself plenty of white space. All right, so we had plotted 3217. Now we plotted 3231.25 in my illustration of a highlighter. So the only missing piece there is the actual price label. So again, you use the ABC if you want to do this on TradeStation to look like mine, 3231.25. Now there's this level that says February 24th high, 3312. And a lot of newer Skinny members say, hey, I don't see the origins of that level on your 60-minute chart. Where are you getting it from? If it doesn't say a specific time frame and it's not showing on the 60-minute chart, it's from the daily chart. Rarely, once in a blue moon, I'll get levels from the weekly chart, and it will say weekly. So let me go over to where the magic happens, which is my Skinny analysis deck here. So this is what I come in and look at every day. I keep a continuation chart in the bottom left. I do not ever write the report on the continuation chart. I use that to help me assess bigger picture patterns and trends. I have a daily chart in the top left, and that's what we're going to look at for where I pull some levels. The chart that you see in your report is this 60-minute chart. And then down here, this is normally a 3 or a 5 or a 15-minute chart. Okay. So let's go to the daily chart. So in the daily chart, and we will spend more time here in a moment when we talk about trend lines, but if we want to draw those resistance levels, okay, let me just take off what's here. Do you guys see how this 3312, it says February 24th high? So February 24th, that's this candle right here, this long red candle. So I would take a horizontal line and go mark it here in order to know my place on the daily chart. But if I want to create that line on the 60-minute chart that I'm giving you, then all I do is I come here, and let me show you in our blank chart. I go into like open air. I just click wherever, drop a horizontal line, make the color I want, and then I go into the data to put the value. So that was 3312. Now it disappears. I have to shrink the y-axis to bring it back in. If you guys follow that recreation process, type a Y for me. So when you look at the charts and see the levels I pick, first you should do your own analysis of why you think it was important. So there's a great question coming in of why was that an important level? So let me go back to the daily chart and see what you guys think. Oh my God, okay, sorry. My cursor, I was confused on what app I had open. All right, so if I go here on this chart, I'm just gonna leave it for you. Give me your guesses, guys. What's significant about the February 24th level? Yes, lots of you got it. The gap down that then became the beginning of the 2020 crash, at least so far. That was very important. Now, sometimes my support and resistance levels aren't that grand. They're just areas where there was past buying and selling. It doesn't necessarily have to be some price level that has like some great story to it. But in this case, that's what led to it. And when I'm using daily or weekly levels on the chart, if they are continuation chart levels, that will be indicated. And I have the key for you right here. See how it says here? Brackets CN indicates level exists on continuation ES chart and TradeStation. So if we were back in time, so you may recall that the late March reports, I didn't have a lot of support to go grab down here, right? We were at the bottom of this contract. So in this situation is when I went back on the weekly or the daily continuation chart. And during this fall, especially when we got past these lows that didn't even exist in the contract chart, that's when I started pulling from the daily chart, and you would see bracket CN after that level. So if you guys understand that, you will be able to clearly tell a continuation chart level from a contract chart level, type a Y for me. Good question. All right, great. All right, so we did draw 3 resistance levels. Let's go back and draw 3 support levels. So let's take our example here. So we have 3183.25, intraday high or low, midpoint, old intraday high. All right, what is an intraday high or low? I will use that language a lot. I will also use intraday low or high. So I'm just gonna draw it for you here, okay? An intraday high or low is when there's a price bar that has 2 high or lows around it. That's the basic definition. And usually it had an uptrend before it and an uptrend after it. An intraday low or high is the opposite situation. Intraday lower high means we have a high candle with 2 lower candles around it, and likely downtrend before, downtrend after. So with that in mind, let's draw the levels that we have. 3183.25 intraday high or low. So now that I've drawn these, you know, sort of painful, right? They're little finicky little lines. I don't go redo them every single time. Who has time for that? I create new parallels and I make them the color I need. Then I can go do the supports. So 3183.25, that's this guy right here. So I zhuzh it really close. And if I really want to get exact, 3183.25, I open up the window, I format the trend line, 3183.25. And that's where it is. And then I put the label out here, 3183.25. Type a Y if you understand how I drew this, if you want to recreate it on your TradeStation or on your charts. Okay, now do you guys see how this level is an intraday high or low because it had a higher low around it on either side of the candle with the low in the middle, and it was in the midst of an uptrend, and then we continued after. So if you physically see these 3 bars and the preceding uptrend and the following uptrend, type a Y for me. That's what an intraday high or low will always be. If I see it as a different kind of low, it will just say low on the 60-minute chart. It will say bar low. If it's a bar low, it just means that I have reasons for that bar to be significant, but it's not technically an intraday high or low. Okay. Great. Now let's draw the others. Midpoint June 5th range. Well, how do you draw that on the weekly or 60-minute chart? Well, let's go to the 60-minute chart that you saw when I put this report out, or that you're looking at in your example to learn later. I want you guys to notice something. Everybody bring your eyeballs to 3158.5. Take your eyeballs all the way to the left. Do you see how this line is just floating in midair, apparently? It's not hooked to any part of price. That's because it's hooked to the time. And here, I hook it to midnight because I know that midnight going into the session was covered from the previous overnight. So this is not conflicting with my rules about the session start or end. It just makes it easy to find that point on the hourly chart. So 3158.5 as the midpoint of a range, of a daily range, was gathered from the daily chart. So here, June 5th is last Friday, this big bar. I take the Fibonacci tool, price retracement lines, and I have set it up so that it only shows me 50%. So I have made everything else inactive and I just keep the 50% retracement. This is tied to my study of Gann analysis, and we can look at that more when we're doing live application in the markets as the price action unfolds. Do you guys see how this is where I got 3158.5? Guys, we're focused here on taking the report and bringing it to life. We'll have plenty of time in Skinny School to look at analysis applications. Okay, great. So let's go back and draw that on the line on the chart we had here. So 3158.5, okay, so I'm just gonna find June 5th when it started. That was about here, okay? So this way, it's a quick reminder for me that when I see a line like this sort of in midair that doesn't have an anchor, I know right away that I pulled it from the daily chart. That I'm looking at it on the 60-minute chart, I can look at it in a 15-minute, 3-minute, whatever, but it was pulled from the daily. All right, and then the last support we're gonna recreate, 3145.5 old intraday high. What does that mean? An old high is a price high that was traded through, but that we wanna revisit as potential support because let's say this is price action moving higher. Sometimes this will happen. An old top or an old high may provide new support and price go higher from there. So when I look at this chart here, see how this 3145.5 old high calculated, derived just from the 60-minute chart is relatively close to the midpoint of the entire day's range. I like that. I like seeing support derived from different resources converge together, or resistance derived from different resources converge together. That's what makes this a tight little zone of support. Okay. And if I wanted to bring the label in, when I have lines really close like this, then I just kind of move it over so that I can do that. So I can fit them all. Okay. Okay. So this is illustration of drawing 3 resistance, 3 support. How many of you think you can do that no matter how new you are to the markets? That you could take the report and you could practice doing that and use that to start observing the price action, momentum, everything else. Great, because after we go through trend lines, I have essentially what I think the best practices are for using the Skinny, the way that I did, the way that my dad would use them after I handed them to him and we talked about it, okay? All right, so let's get to the last piece of the report, the written report for the futures, which is the trend lines. So I'm going to bring us back, clean up our illustrations, and here we go. Okay, so here we are, guys, all right? So the trend lines wrap up the report. They are guiding my analysis, and I'm giving you the exact settings every time so that you can redraw them on your own charts. Okay, so that you can boost your trade setups on top of what we're seeing with the actual traded price, the momentum, the market timing, anything else that's in play. Now, the trend lines are broken down in the current version of the Skinny into 2 sections. One is called short-term and one is called long-term. So let's look at the trend lines on a recent report and analyze and redraw a couple of them together. So I'm going to bring over our report example. So whether you're here learning for the first time or coming back to review Skinny School, this June 9th report will be our anchor. All right, so now we're at the beginning of the June 9th report. So we've covered a lot here, guys. We've gone through how we get the chart, how I get the chart put in front of you, what everything means around it, the prior commentary and recap, the outlook, the most important section, the support and resistance levels, and then here we are for the trend lines. Now in this current situation, I don't have a short-term trend line to show you. So we could go back and look at old reports. The key thing here is to realize, and I say this every time, the short-term trend line details are based on a 60-minute chart. So they will be explained to you in the exact same way that the long-term ones are. Now the long-term trend line details are based on the daily chart. And there's a couple of important points here. So you guys tell me, in this section right here, how many trend lines am I describing? Yeah, 5. And you can distinguish them by the colors, not only the color described by the word in the name, but by the actual color of the font. I do this to make it really, really easy for you to come back and identify them, okay? So when you're looking at these, rising, falling, whatever the direction of the line is, that will be first, always. The color of the line will be next. Rising green, falling red, rising black, rising orange, et cetera, et cetera. Then you will see it say trend line or tentative trend line. So trend line here, trend line here, trend line here with no qualifiers means that those are lines that if they are rising, they've had at least 3 touch points. So if they're rising and connecting lows, they've had at least 3 points of touching price like this. If they're rising and connecting highs, they've had at least 3 touch points like this. So this is rising and confirmed. Falling and confirmed would mean price is usually going down, which is why the line is falling. And so you're connecting 3 points or more of price. Or the line is falling and connecting 3 low points in price. Type of Y, if you understand, this is a rising confirmed trend line, so it has no qualifier to it. These are falling confirmed trend lines. That's a weird F, but falling confirmed, okay? Now, when there is the word tentative in there, tentative, tentative, what that means is that there's price action that's unfolded, but I only have 2 points so far. So a rising tentative trend line support looks like this. Rising tentative trend line resistance looks like this, where the trend line is only touching these 2 points. It doesn't have a third touch officially yet. Now price may end up coming and trading through it, but it could like wobble around and all that stuff, but I'm still keeping it on there because I find it useful. I'm going to show you that now, okay? So the key here is if there's no qualifying word and it says trend line, it means it's confirmed with 3 touches. If the word tentative is there, it means there are 2 touches. Tentative 2, T, T. That should help you remember it. Type a Y for me if you understand this. Tentative trend line means 2 touches only. Any other type of trend line means it has at least 3 touches. And you know how you're going to know that, guys? Because the word confirmed will be next to the data points for a confirmed line. So this one right here is confirmed because I'm giving you the 3rd touch point. Here, giving you the 3rd touch point. Okay? These other ones, here, on this middle one, giving you this touch point. But this second one and this 3rd one, they don't have a 3rd touch point. The date's not in there. Okay, so let's go ahead and redraw one of these or two of these to the chart. So you guys just, let's make it fun. You pick the color you want to see. Those of you here live, building Skinny School with me, pick the color you want to see drawn in real life. All right, I see my first two guesses, green and red. Christmas theme going on here. All right, so I'm going to bring that off to the side. You have the same information. We're going to bring up the TradeStation. And now we're going to take this same exact 60-minute chart and make it daily. All right, so this has a lot of old data on it. So I'm going to pause the screen for a second and clean it up really fast because this is just a lot of deleting that needs to go on. So we'll cut this out of the final recording, but this happens. Okay. Because every time I replicate a window in TradeStation, it saves whatever drawings were on there. But I'm almost done. Okay. Okay. You should hear my mouse doing a little dance. Okay. Now I'm going to keep our annotations for the 60-minute price and support and resistance, okay? All right, so now we've come to a daily chart where we can recreate the trend lines. So we've got the green one here. Green, rising green trend line support joins May 14th and May 22nd lows, confirm May 26th. So May 14th is back here. Wait, May, oh gosh, 5, okay, May 14th. So I just kind of put a placeholder there. And then I come back and I find the next point, May 22nd, okay? So that I kind of know where I want to anchor myself. Get the trend line tool, put it to the first low, connect it to the second low. And now I can take away my markers and actually make the trend line the color. And the color I plotted on your report and in your chart is the color I'm keeping it. So I have this like dark green. I go to snap mode so that I can touch those price points exactly. And all I care about is getting these two price points correctly because I know that this rising trend line support was confirmed on May 26th. It says it. So all I have to do, go here and extend right, and I can see that it was confirmed on May 26th. Price held it on May 26th. Do you guys understand how I recreated that line? Type a Y for me in the chat. Okay, great. Now, here's where I'm different than others. I still have this line on here, right? And this is like kind of a messy little line. But I like that this is providing guidance to me on how this whole rally seems to be unfolding. It's like a, you know, kind of a dirt path that the car is not really totally staying on, but it's still guiding us through the forest. That's why I keep it on there. And when you're seeing it represented in a 60-minute chart. So what happens is I'm changing the daily back to a 60-minute, and this is what the trend line looks on the 60-minute. Now, if I squish it up, so when I say squish it up, I mean getting a lot of price action on here, you'll see that you have to then come and adjust it. So then I do that. I come to the 60-minute chart, and I make sure I'm connecting to those levels. So whatever they were, I'm going to come back and connect them here. And you can see the same thing happened. So we did confirm on that, on the daily chart, it shows as the 26th. On the 60-minute chart, it shows as the 27th. We traded below intra-hour, but weren't able to really sustain a break below, right? It whipped right back up. And then all along since there, price has sort of gravitated to this line. That's why I like watching it. Now, because it's churning around it, in any given moment, it's not necessarily support. It could have turned to resistance. But the origins of how I drew it or how I call it support or resistance. This is like the deepest I've ever gone on me and my trend lines and how I draw them. So type a Y for me if you guys are understanding all this good stuff, and it'll help you deploy the trend line analysis in your own trading from the reports. Now remember this, I do not every day that I make a new trend line, then spend time to explain to you at the beginning of the report, hey, after the trend lines, it's up to you to check. I will say that the long-term trend lines, they don't change day to day to day, but just always come back and check them, time permitting. If you're crunched for time, what do you read in the report? Type the answer. If you can only do one thing with the skinny, what do you read or analyze? Yes, the outlook, the outlook, the outlook, the outlook. Time permitting, next step is support and resistance levels. Then coming back to the chart to see all the annotations there. Looking at the trend lines. And then again, this is if you're crunched on time, then come back to the prior commentary and the outlook, prior commentary and the recap. It's best to just read everything in order, but if you're crunched for time for whatever reason, that's it. Yes, so I've been talking about this particular trend line as an example that I know it's broken. I'm not saying that it's not been violated, but look how even today we've just been churning around it. Like we can't really get away from it. We're not getting momentum up and away from it. So I just want to keep watching it, but I'm not telling you buy when price comes to this green trend line. So that's what I'm saying. So this is all analysis that eventually should be supplemental to what you're doing. That's why I'm saying things like, if you're crunched for time, read the outlook. Because I'm expecting that with time and practice, you do all your own analysis first. Then you come and you take this to re-emphasize it. And I'll be very happy if, however long it takes, months, years, I don't know, any of you come to me, like one of my early traders, Andy, did, and say, you know what, I kind of think I graduated from the skinny. I will be thrilled. I'll probably feel for you the way my dad felt for me when he started to see me analyze the markets with more clarity and objectiveness than he did, because I could make it my full passion. And, you know, he was at it later in life and had other things going on. So there's a true desire for me to make this a teaching tool and, of course, a profit-making tool. All right, so let's go on and talk about the best practices for the skinny, depending on where you are with the futures reports, okay? So here we are, guys. So when you come into the skinny, if you're here in this live training or watching this recording and you just got into the world of the skinny, here's what I suggest for first-time application. I want you to come in and look at the most recent skinny report in the portal, because unless you became a member the moment I published the email, you will not have gotten the email for the day. So go into the portal and see what the most recent report is and read it top to bottom like I did with you here. So read it in full, because again, this is you studying and preparing. You shouldn't be crunched for time. You should go through it from top to bottom in the order that it's written. Then I want you to do what we just did, applying 3 support and resistance. If it's your first time application and you're really new to the skinny or the futures markets, just take 2 supports, the ones closest to the current price, and 2 resistance, again, the ones current or closest to the current price, and add them to your charts. Then apply the trend lines to the charts, because in your preparation, your first time application, before you get the next report or before the market opens again, you have time to do this prep work. So that's what I recommend the first time you're diving in and touching the skinny and the mini, or if any veterans want to kind of go back and practice. Type a Y for me if you guys understand these steps as your first set of actions. All right. Now, here's where I break it down. We're going to go through the daily application, whether you're a beginner, intermediate, or advanced. So a lot of the steps are the same. The ones that are different, I will highlight in my explanation. And then after this, we're going to get ready for session 2. For those of you live, that's tomorrow. For those of you with the recording, that's just transition to a little bit different set of topics here. Okay. If you're a beginner to the markets, and this can be a little subjective for people, so I'll tell you what I consider a beginner to the skinny, and that's what these recommendations are based on. Either you have never traded futures before, you're trading futures only in simulated mode, so you haven't dealt with them live, but you have experience in sim, or You are coming to the skinny with a losing track record in your trading business. Because you might have a lot of knowledge, but if you don't have a profitable track record in your business, I don't want you to like dive in all gung ho. I want you to do the beginner steps first, and then when you feel comfortable, graduate to intermediate. Type of B for beginner, guys. Those here live, you understand what I mean by beginner. Because again, it can be subjective, so I'm telling you my definition. Great. So beginners, come read the latest published Skinny in full, whether it's the one that came to your inbox or the one in the portal, okay? Read it again. Read it again. And this second time, make note of anything that stands out. So you can either, if you're kind of in that little bit more tech savvy where you can take an email and save it off as a file on your own desk and you want to annotate it that way, or you want to print out the email on paper and make notes, or keep a separate document or folder or notebook of your observations of the Skinny report and questions you have. Okay, any of those work. But make note of anything that stands out to you, either because you have a question about it or it seems like interesting market analysis. And those are the things you can focus on as you kind of are observing. Go to the support and resistance section. So go to the support and resistance section of the report and apply 4 supports to your chart and 4 resistance, just like I showed you here. So you don't have to fully yet understand the sources of those levels. You can just draw lines. You don't have to even draw the beautiful anchor to the price lines I did. You can just draw easy horizontal lines. So type of 4, if you understand that beginners should put 4 resistance and 4 supports. There's a total of 8 levels on your chart so that you're setting yourself up to be ready to learn from the subsequent market action. All right, apply the trend lines. Again, this may be more about revisiting the trend lines if you've already done the first time setups, but the trend lines are definitely useful to have a guide to the shifting support and resistance that they provide. And at the end of the trading session, okay, go back and look back at how the market played out versus the Skinny analysis. So do that at the end of every trading session. If you find you're more fresh and more focused after the market closes, but before you go to the gym or dinner or whatever, pick up the kids from school, whatever it is, fine. If you find you're freshest early in the morning where everyone's still asleep or people have gone to work or school and you're fine on your own, that's fine. But pick the same time as much as you can, Sunday, Monday, Tuesday, Wednesday, Thursday, any of those days. Give yourself a break, a little on the weekends, it's okay. When you get more intermediate, you will want to check the markets on the weekends, or at least get ready for them on the weekends. Okay, so this is my beginner's daily application. If you have any questions, let me know. We're going to build on this for the intermediate trader. So who's the intermediate trader? The intermediate trader has been trading on sim, so trading futures on simulated platforms and making money. Has been trading live perhaps, but is kind of near break even. So you don't feel like you've been making a steady profit that you can count on pulling all the time, but you haven't blown your account and you're not underwater. That's my view of who's intermediate. But you yourself might just feel knowledge-wise intermediate, or maybe you were really expert at stocks, but now you're coming into the futures, and so you have more chart analysis knowledge, but you're coming from another market and you're new to futures. So this is an important distinction. When you're intermediate, because you're new to futures, I'm expecting that you have previous successful analysis and trading experience in another type of market, Forex or whatever else. If you're coming and you're new to futures totally and you haven't been in any other market, you're a beginner. So type of 1 for intermediate if you understand that, because I am the one who's going to look the same to me. Okay. So intermediate folks, I want you to do your own analysis first before you get the report in your inbox or before you go into the portal to check the NQ futures. Whatever it is that's working for you, whatever it is that you've understand that's led you to being profitable on sim or not blowing your account, Okay, not blowing an account is a step in the right direction. So consider that and do that analysis first and be ready with it. Then when the skinny comes out, read it in full, okay, similar steps to the beginner. Read it again and make note of anything that stands out. But this time for the intermediate traders, I want you to be prepared for even more potential volatile price action by applying not just 4, but 6 levels. And notice I have a max here because I want you to focus not just on a bunch of numbers on your screen. I want you to keep your focus on all elements, not just price, but momentum and time and patterns too. So apply up to 6 of the levels from the report for support and for the resistance. If I don't have 6 levels, I only have 5 that day, then just apply all 5. Okay, but I generally aim to have 4 to 10 levels of support and resistance, depending on the direction the market's moving. And I usually sometimes have more support levels listed than resistance, even if we're a nice steady uptrend, because on the off chance that some crazy event comes in and we experience market volatility to the downside, price falls faster than it rises. So you may wipe out support levels faster than you would attain resistance levels. That's very important. If you didn't know that already, fear that drives prices down is stronger than greed that drives prices up. So keep that in mind on your charts, okay? I want you to apply or review the trend lines. Again, check to see if any have changed, and still go back at the end of the trading session and look at how the market played out versus the skinny analysis and versus your own analysis. Daily review. All right. Any questions about how intermediate traders should bring things in? The blue is highlighting what's a little different. I want you to do your own analysis first, and I want you to be a little bit more proactive with your support and resistance. Okay, now the advanced trader. Advanced trader is profitable in their futures trading business in a live setting. Profitable in sim, I would say intermediate. When you can take that thing and go advanced and get profitable, consistent results, you're advanced. If you've been trading futures a long time and it's the only market you've ever traded, that also adds qualification. So maybe you're already coming in as an ES or NQ trader and you're just looking to boost what system you already had that was working for you, okay? Advanced doesn't mean perfect. Advanced to me means you have achieved consistency either with sticking with a market for a long time and putting your focus on it, or being able to have a profitable trading business within that market and you're just looking to grow from there. So type A for advanced if you understand what I mean by advanced. And everyone has potential to get there. Okay, so here's what's going to be my recommended steps for advanced traders. Do your own analysis first before the report comes out, just like a intermediate trader. Read the latest published full skinny. Read it again and make a note of anything that stands out, especially in the outlook. Advanced traders should really hone in the outlook like a few times. If you have the privacy to do this, I even would suggest reading it out loud. Things register different in our brain and our learning when we use different senses and systems to express them. So reading and narrating in your mind is different than reading out loud. This is why affirmations are very powerful, because they're designed to be read out loud. I read affirmations every morning, and it's funny, I started this practice a few months ago, and they're starting to just be part of my psyche in a good way, okay? So read out loud when you can, focus on the outlook. Take all the support and resistance in the report and put it on your charts. I believe you can handle it, okay? Could it be 10? Could it be 5? Could it be 3? Are there going to be different types of resistance levels that are a little bit more nuanced than the ones we've looked at? Yeah, and we can cover that in our remaining time in Skinny School, but I'm getting the real foundational elements here. Review the trend lines on the charts. Be sure you're always on top of what the latest ones are that I'm observing, because if I see a new trend line, guys, on the chart and it's tentative, you want to plot it when I do, knowing that it's not confirmed, but being able to benefit from it potentially before it's confirmed. Okay, that's why I tell you to check this. Now, I want my advanced traders to check in on what's going on in the markets versus the skinny and their analysis twice a day. So this is presuming you're trading the whole day. If you're not, that's fine. But if you're trading, a period of time, 3-4 hours, then whatever mid-session is for you. So if you decide you're going to trade 9:30 a.m. to 1 p.m. Eastern, so 3.5 hours, right? Find the midpoint of that time or designated midpoint. It doesn't have to be exactly. When I started out, for me, it was 11 a.m. Eastern. I don't know why. The first hour and a half to me was like one part of the day. 11 was the break. And then everything later, if I came back to trade, was the rest of the day. So twice, I want you to come back in, look at the report, look at how the market's played out, look at your analysis. So do it in the middle of the trading day to make sure that whatever you're doing that's working well keeps working well, or that if you made any mistakes or misses, you can pivot and still do it at the end of the session. And by the end of the session, I mean when the market's closed or when you have closed the market for your personal purposes. There is insanely high value to studying intraday price action when the market's not moving, because then you don't get caught up in the flicker of the screen because you're not worried about putting a trade on. Type a Y for me if you guys, my advanced traders, or those of you who aim to be advanced, that should be everyone, understand what I'm recommending here. Fantastic. All right, last piece, which is for everyone, weekly application to consider. So if you're day trading futures using this skinny on the mini or skinny on NASDAQ, or you're swing trading, either way, weekly application as follows. I used to do this when I started writing the skinny as practice for the next week and to review with my dad. Reread the skinny reports from the past week on the days that you traded. There's time freedom that I want you to get back in your life through your trading business. We all want it in some way or the other, either to quit a day job, to be able to spend more time with a loved one or an elderly person in our family, to be able to contribute to causes we like. Everybody has some desire for time freedom back in their lives. So if you choose not to trade every day, don't worry about the skinny on those days. I want you to focus on when you were actively using it, okay? It doesn't hurt to read other issues, but I'm telling you to focus on the days that you participate in the market. Write down any questions that come up. So first, take notes on them. Either type up a separate file with your notes, keep a digital file, keep a notebook, and always, to make it easy for yourself and for me to help you, jot where that question came from. So which issue of the skinny did the question come from? Now, go and check your Skinning the Markets portal resources for the answers first. Because as we take Skinny School forward and as I continue to provide resources to help use the Skinny best, there will be areas for you to navigate, okay? And as they grow and are named and have different features, you'll be made aware. So check your portal for answers. Bring your remaining questions to Monthly Group Coaching Live. That happens once a month for the lifetime members. And those of you, whether you're a lifetime member or you're on a pass trying the skinny out for 30 days, you have eligibility to join our VIP Facebook group. And I'm checking in there every trading day. And you can post and ask questions, like a comment in a group, just like you do in your news feed in Facebook. You can bring in that chart, or you can say, hey guys, on today's skinny, here's what this thing is I saw. I was confused about it. What do you guys make of it? Hema, what do you make of it? And if I'm available that day, I'll come in and give my feedback. But if I'm not, your peers may. That's a great place to learn from other people who are using the same tool that you are. Okay? So I think that's the foundation that you really need to understand how to best use the skinny outright just from the report itself. There's plenty to be applied directly to the markets. We, of course, have to look at the stock grid, but I want to come back here and bring us back to our Skinny School objectives. And this is my view to you based on my own development of the reports, my own use of them, and now teaching you on how to best apply the reports to analyzing and trading. Okay. So we're going to proceed from here into our next topic as we continue to train. So for those of you here live, that's a wrap for session 1. Processing this recording. This will be added to the portal by the end of the week, if not sooner. And tomorrow for session 2, most likely we're going to shift gears and focus on the skinny on stocks. Then we're going to come back and focus on all types of reports on session 3 and look at the actual strategy implementation. And then session 4 is going to be futures focused with the live markets. Good stuff. Okay. So awesome. I hope you guys got a lot of value out of this. Those of you who've been Skinny members for a long time, those of you who are brand new. And I've always wanted to kind of put this together, and I took your questions and your feedback and everything for me to really focus in on what I think you need. And so I'm excited for you guys to use it. Awesome. Okay. So I will catch you guys tomorrow. You're going to get the invite for session 2, and I'll see you tomorrow at 4:30. And I will have this Google approach as a backup in case my PowerPoint can't get fixed, although I probably take a stretch here and try to call Microsoft. So for those of you here live, thanks again for your patience. I'm sorry it went on so much longer than we thought. You have to get used to the fact that even when I say, oh, I promise you an hour, I end up finding bits and pieces, and often we end up meeting like we did here for an hour and a half. But even if you can't sit there the whole time, you will get the recording in the portal to review at your convenience. So, okay, thanks guys. Have a great rest of your night, and I'll catch you tomorrow. Bye.